All right, good morning, guys. Today is Thursday, October 5th, and it's currently 8:14 a.m. So just doing a review of a trade we took yesterday so we didn't have any trade for Monday, no trades on Tuesday. Yesterday we took a small loss of minus 0.75. Again, it was a fake out in the market, so it looks like lately we've been faking out, but looking at the last month's return, even with the minor losses or some of the losses that we did take, we still ended the month in positive. So the month of September we ended with that 2.66% gain, so that's good. So unfortunately we started off October, the first official trade, with a loss, and we'll go over that particular trade. So yesterday we had this level, so my bias on gold is still bearish, and we had this double sell SAR zones on the 15-minute time frame. We also had some on the 30-minute time frame, like we had this one down here, and I'll show you guys how it comes into play afterwards. But I want us to start with the 15-minute time frames. Now in this time, again, I've replayed this trade because of course it's not Wednesday anymore, so I just did a bar replay for it. So during the New York market open, we had this move down here. So in this instance, I actually marked it up. If you guys check out the live session from yesterday, I had actually marked this up, and I marked this up as a break and continuation sell, so possible break and continuation in the direction of daily bias. So I needed two 15-minute candle closures, consecutive 15-minute candle closures, to close below here. Now two consecutive 15-minute candles to close below here for me to enter, and I'd already marked this up, and you can check it out on the live session from yesterday. So for this one, 30 pips stop loss and 60 pips TP right there. So that's a trade that I'd marked up. So we needed two consecutive 15-minute candle closures. So this candle did not break or close below those zones, and actually it became a triple sell SAR, because you see, as this candle was coming down, it created a third SAR. So this one then would be triple I'm sorry, okay. Okay, so this candle broke and closed below there, so excuse me, that's your break candle. So we needed the next candle to also close below that this triple sell SAR zone, which it did. Now during the live session I was mentioning, if it does close far away from this zone, I wouldn't be taking the trade on impulse, or I wouldn't be taking the trade at the close of that candle. As much as the trade validated, you always want your stop loss to be above the SARs you're trading. So for me, I like trading with a 30 pip stop loss on gold, and I wasn't willing to extend that. So even for this trade, I still waited for it up here. But the trade, of course, validated down here, and our trade could have started off in profit. Now here, what else do we see here? We had that zone right there, but we also had this double SAR and this other double SAR here. So this candle that was the continuation candle of the first trade setup became the break candle of this sell SAR zone right here. So which means there's another trade that lined up here. So the continuation candle in the previous setup became the break candle in this setup right here. So again, we had another break and continuation. In this case, it was of a double. Now this is the trade, and I wanted that continuation candle to close next to the SARs. So remember, so the difference between the previous setup and this one, the previous setup, I wanted this 15-minute candle to close next to this SAR so that I can have my stop loss well above those SARs and right price down. But unfortunately, the continuation candle closed so far down. So, which is why instead of entering this trade, that would have been the trade entry for the first setup, I saw the other setup play out. So the next setup, so forget about these other zones. This zone right here validated because the continuation candle of the previous setup became the break candle of the next setup down here. So break, continuation, because both of these candles close below this SAR. So at this instance, on the live session, I said I was taking this trade with a 0.75% risk, and trade started off in profit, zero drawdown. Now the goal for here, I was waiting for at least like a 1:1 risk to reward for me to go ahead and set break even for the trade. So I think we got in just a little below, down here. So in this instance, our trade missed getting like a 1:1 risk to reward just slightly, because I think due to slippage, we missed that 1:1. So we were already in this trade at this moment. So the trade kept going, but it had failed to give us that 1:1 risk to reward. Because again, there was slippage when we entered, because I was hoping we get that 1:1 risk to reward. But anyway, we weren't able to get a 1:1 risk to reward, and the trade came back up and stopped us out for minus 0.75%. Now, this one was a fake out, because as I'll show you guys later, or if we keep playing this over, you see the trade came back down. So you see that the trade actually came back down. So this is what unfortunately the last few trades we've just been getting faked out, and the trade comes back into profit. But anyway, that's why we always have a static stop loss, static TP, and we do not want to mess with those or extend them. Now for this particular trade, if we go down to the 30-minute time frame, so we've already seen the trade, and this is the trade I went up in there and recorded minus 0.75%. Now I want to show you guys the setup that came up after, and then I did send it in the group as a trade idea, and the trade did hit TP. Unfortunately, I did not send it as again, for me, the official trades, I normally send them out with risk, with TP and stop loss, and the entry time, or when I'm entering. So this is why I normally say sometimes I'll take trades that I don't send out all the trades I take on a personal account, so keep in mind. So for this one, as much as I did take the next trade and it hit full TP for me and actually made quite a substantial amount, I didn't send it as an official trade. I sent it as a trade idea. The reason is we had already taken a minus 0.75% loss, and I didn't want to risk somebody else taking the next trade, even with a 0.75, and ending up the day at minus 1.5. So I normally try to keep our losses, if we do have them, between 0.75 or 1.125%. But normally when we take a loss on an official trade, I really don't want to keep sending other trades. So which is why it's key for people to learn the strategies, so that they can find trades by themselves and not just rely on me for the trades that they take. Now let me show you guys the 30-minute setup. I had deleted them because they were ideally close. I may have to redo it. Okay, I'll just redo it. So I'll go ahead and so this is the one that hit stop loss right there, so we'll keep it there, and then we'll go to the 30-minute time frame. So remember that one zone I mentioned for the 30-minute time frame, this zone. So we had this sell double, I think it was a triple sell SAR zone. So we marked this up. So we also saw this during the live session. Unfortunately, it wouldn't have lined up before I ended the live session. So here, that's a triple sell SAR on the 30-minute. So that's break and continuation. And we do this here. Triple Now in this instance, so this is the trade that hit stop loss before, right? So I'll leave that on there for now. So let me replay this. So during market open, we had that candle. This is the 9:30 a.m. Eastern time candle. So that's the break candle, because this is the zone we are looking to trade. 1, 2, 3. Okay, so that's the break candle. So we need the continuation candle. So the continuation candle has to close below this zone. So this was the continuation candle on the 30-minute time frame. And let me take off this 15-minute entry that I showed you guys. So technically, this was the entry for that break and continuation sell. However, if you guys know me, and I've gone over this time and time again, as much as the trade can be valid, the key thing, you need your stop loss to be above the SARs you're trading. So always remember that. For me, if my stop loss, if the trade entry cannot allow my stop loss to be above the SARs I'm trading, I will almost always wait for a retracement, because there's three things you can do: either take the risk and hop in, or wait for the retracement, or enter in with like half the risk you'd normally use and save the other half in case the trade retraces. But in this case, and given that this is a 30-minute candle, the stop loss relative to my entry was like 120%. I'm not willing to take that risk. So this is the trade that later on I saw, and you see that retracement back up. You see that retracement back up. This is the reason you now have to wait for that retracement. So at this point, I went down. So the key thing here is you wait for a retracement to the zone, to the SAR zone you're trading. So once price gets back to that SAR zone you're trading, go down to the 1 minute or 5 minute time frames. And if you guys remember, I do not extend my SARs on the 1 minute and 5 minute time frames. So break and continuation, so it's changed from that. So in this instance, let me see if I can go back to that 1 minute time frame. So there was Wednesday, October 13th at 11. So let me see if I can show you guys that 1 minute time frame entry. So we'll go down to the 1 minute at around 11. Okay, so you go down to the 1 minute time frame, and then this is the zone that you're trading, because that the zones stay intact after you've marked them up. So this is the zone you're trading. So in this zone, you see this is that retracement. After the 30-minute candle closed down here, this is that retracement you're waiting for. So you're waiting, and this is the 30-minute zone somewhere here. So what you're waiting for down here is a break and continuation of a live sell SAR. So here I came and I waited, and you see I sent this as a trade idea, and I said I'm looking, and this was 11:25 a.m. right? I'm looking for a gold entry on the 1 minute time frame for the 30-minute break and continuation that validated, but the entry was far. So I already showed you guys how the 30-minute entry validated, but unfortunately the trade was a bit far away from the SARs. So in that 1 minute time frame, and I said it was around what, 11:25. So this is 11:34. Okay, so we are looking for 2 consecutive candle closures below a live sell SAR. So this one gave us a break, but then the continuation candle came back and closed above. So we need 2 consecutive candles to close below the sell, a live sell SAR. So this one closed below. Unfortunately, the next one closed above it. So we keep waiting and waiting. So in this instance, I used the same level. I saw this candle closing above that level, and then the next candle closed below it as well. So at this point, I entered. So you can see how, right, this was a trade idea. I just said I'm looking for gold entry on the one. So that's not an official entry. It's just like a trade idea. So, and then I marked this up. So this was looking at it on the 30-minute time frame. And actually I entered 2 positions. So even previously, before the 0.75 loss we took, I was up already for the day like 3% from another trade I'd taken the day before. So here I took that trade. When the trade, it went right directly into profit. When the trade retraced up here, I waited for another. So that when it pushed up right there, waited down in the same zone, and then I waited for another live SAR, and then at this point, no, that one closed above. Yeah, there. At this point, I entered another entry right there. So I never break the rules. It's always 2 consecutive candle closures. So same level, and I entered 2 because I was so sure that we had gotten manipulated, and for this trade setup I had like a 90% probability that the trade was going to go in my direction. So I actually entered 2 positions here. So that's the 1 minute time frame, and then that was the setup. So if I return back to the 30-minute, you'll see that that is similar to what I'd posted for folks here. So you see that setup right here, it's pretty much this one. So it was break and continuation of a this is what I was trying to get to show back up. Break and continuation of a triple sell SAR zone in the direction of daily bias. Entry validated down here, whereby the entry was overextended, so meaning my stop loss would not have been above those SARs. So waited for an entry on the 1 minute time frame in the sell SAR zone, which is what I just showed you guys. So for this particular trade, you can see both of them when they ran went straight into full TP right there. And you'll see here, I sent this in the results. So this is the first trade I'd taken the day before, so I was already up like 3%. This is that trade that we lost. So I normally take any trade that I mark up, I take it, whether it's a win or whether it's a loss, I normally show it. So this is the trade that we lost or hit stop loss, and this is those 2 entries that I scaled in. So you'll see 1823.87, 1823.3. The values might be different here depending on slippage or the broker, but it was around that 1823 zone. So you can see both of them. I held them, did not hold them to full TP because I was already up pretty significantly, so I actually closed them early, and I was up for the day. So this is the importance of learning the strategies, so that if you take a loss with me during the live session, you can find a way to recoup it even by yourself. So this is the importance of, again, always learning the strategies. But anyway, so I'm hoping we stop getting caught in these manipulations, but we'll see. But I'm not worried. The key thing is to always follow your rules and have a proper risk management strategy, have a proper risk to reward ratio as well. But anyway, we'll see what the rest of the week holds for us. But anyway, I'll catch you guys in the next one. Peace. Good afternoon. Today is Saturday, October 7th, 2023, and I'll be going over the trades we took on Thursday and Friday. So Thursday was October 5th and Friday yesterday was October 6th. So Thursday we took a trade, ended up at break even. Friday as well, yesterday we took a trade, ended up at break even. So I'll go ahead and review that trade. So this was the trade we took on Thursday, and this was during the live session. So I'll go ahead and replay this since this was happening after, or since I'm doing the review after the fact. So my bias on gold was bearish. So if I go here, you'll see the last daily closure of an SAR level on the daily was bearish. So at that point, I marked up my SAR zone, so anything that's at least a double SAR. So you can see here we have, and this is on the 15-minute time frame. So on the 15-minute time frame, we have this triple SAR. Let me delete it and then mark it up again. So remember, for me, for gold and FX pairs, an SAR level should be no more than 10 pips. So the distance between the top SAR and the bottom SAR should be no more than 10 pips. So for this particular zone, the triple, this is the top SAR is at 1821.2, the bottom SAR is at 1820.8. so that is a 4 pip zone. Yes, 4 pip zone. Then we have this other double SAR right here. The distance from the top is 1820.2, the bottom one is 1820.0, so that's a 2 pip zone, so that qualifies as a and again, it's at least a double SAR, so I don't trade with single SARs by themselves. So when we continue playing the charts, you'll see that we broke this triple SAR, and then we also broke so this was the break candle. So remember, you normally have two patterns, so you can either have a break and continuation or test and rejection. So if you're doing a sell and you're taking a break and continuation, this SAR zone is below price, so price broke and closed below this triple SAR zone, and then there's also this other one. So at this point, a sell had validated for this break and continuation if you're trading this this triple SAR. But remember, I always ask yourself, like for me personally, I do a 30 pip stop loss on gold. So if the stop loss, the key thing is for your stop loss to always be above or below your SARs depending on the direction you're trading, and for me I do a 1:2 risk to reward. So you can see here, as much as the trade validated down here, my stop loss would not have allowed me to take the trade with a 30 pip stop loss unless I chose to extend my stop loss. So this is why I said here I just chose to wait. So the trade had validated for that entry, so I say trade break and continuation of I think at that point it was a double. I think this trade actually was based off of this double, but at this point it would have been break and if you're considering this zone, it would have been break and continuation of a triple SAR zone in the direction of daily bias, and then trade validated down here, but entry was far away from the SARs. So wait for the entry on the 1 minute or 5 minute time frame. So ideally you'd be looking for price to retrace back to this SAR zones that you're trading, and then in this zone you drop down to the 1 minute time frame, and then you go ahead and enter the trade, or wait for, in this case it would be again a break and continuation on that time frame. So here, if we keep looking, what else do we see? So we already have a break and continuation of that zone. Okay, also this one right here is also a double SAR zone. So this candle broke, closed below, the continuation candle also closed below. So this is also a break and continuation of this double SAR zone right here. So this would have been another entry that validated down here, but of course, again, similar to the previous entry, your stop loss, if you're doing a 30 pip stop loss like I do on gold, your stop loss would not have allowed it to be above the SARs you're trading. So again, same thing, you wait for price to retrace up, and then you go ahead and enter the trade. So here you just wait for that retrace. So at this point I shifted down to the 1 minute time frame, and this was on the live session, so you can see the entry came in during the live session. So here so remember, I don't extend my SARs on the 1 minute and 5 minute time frames, and also the daily time frames. So here what you'd have been looking for, since you've already identified your SAR zones, these are the two SAR zones we saw on the 15 minute time frame. So we need price to come back up here and then wait for a 1 minute break and continuation entry and write price down. So let's see if we get that. So in this instance, price retraced up as expected. So we were expecting price to retrace up. So there you go. Price is tapping into our SAR zones. So remember, we have two entries, both on this top SAR and also on this bottom SAR. The top SAR zone is a triple SAR zone. The bottom one is a double SAR zone. So here we need that live SAR to form, right? So this live SAR already formed, so we need two 1 minute candles to close below here, because again, break and continuation, so same setup. So there you go, that's the first candle attempting to break and close below. So keep in mind, we need two candles to close below there, and you can see how candles are just rejecting from that live SAR. So we keep waiting and keep waiting. Okay, another live SAR is formed. Perfect. So that's your break candle. So we need the next 1 minute candle to close below this zone for us to take the trade. and there you go, the candle closed below here. So in this instance, I said, and this was on the live session, was taking this trade 30 pip stop loss, 60 pips TP for 1:2 risk to reward, and tapped into the trade right there. Trade started off at drawdown a little bit, and keep in mind on Friday yesterday, so this was the Thursday trade. On Friday we had NFP, non-farm payroll, so which is one of the biggest news events during the month. And the day before such huge news events like FOMC with the news conference, CPI, which is a consumer price index release or inflation data release, and the NFP data, the days before those heavy news days, price tends to consolidate, or you have a good amount of fake outs. So we were aware of that, and I let people know to just be cautious of that we can get trapped or manipulated. But anyway, so we were still in this trade, and the trade just kept so in this instance we almost got stopped out for this trade, right? We were, personally, I was like 0.2 pips away from getting stopped. So you can see how the trade came so close to being stopped out, and then guess what, the trade came back down. All right, so you can see this is the consolidation I'm talking about. So they had tried so hard to manipulate the trade out, but this is also the importance of making sure having that entry next to your SAR, so you avoid that kind of price action or manipulation in the market. So you can see here they kept attempting to stop out, but then the trade comes back in profit, and then keeps ranging or consolidating. So I held this trade, or we held this trade longer than I would have wanted, but later on the trade came back down. So at this point I think the trade had achieved a 1:1, because the key thing for my entries is when you are at a 1:1 risk to reward, you go ahead and set break even. So here 1:1 would have been at 1815.6, so still not yet at a 1:1. So price kept going down. So at this point the trade had already achieved a 1:1 risk to reward, so I went ahead and asked folks to go ahead and set a break even. So I don't know if we can see that here. See commodities, the official gold. Okay, so here you can see here Thursday October 5th at 11:33 a.m. I said the official gold trade taken on the live session is at a 1:1 risk to reward. Go ahead and set break even at the very least. So at this point the trade was at break even. So this one, I was waiting for price to come for a single last minute push to TP, but you can see they kept consolidating. So this is a price action you expect during days that are before heavy news, and you can see unfortunately for this trade they took us out at break even eventually. I think it kept ranging and ranging, so that's a price action you might be subject to. So here at this point our trade unfortunately got taken out at break even, and that's why you can see here on Thursday I recorded BE or break even. So that was the Thursday trade. Now the Friday trade, this was the Friday trade which was yesterday, so I'll go ahead and replay that. So it was the same thing. My bias was still sell bias. So in this instance I'll go back. So it was around the same thing, the same entry, and this was after NFP. The NFP candle was so let's go. NFP candle was somewhere here. That was the NFP candle at 8:30 a.m. Yep, 8:30 a.m. On Friday. So here what do we see? This is on the 15-minute time frame. So what are our SAR levels? So our SAR levels are here. So we have this zone. So we have a bunch of entries. So the first one, this was at the very top, but the one we traded during news, I was looking at this double SAR zone that's right here. So this double SAR zone that's right here, what do you see? So you have a break, continuation, right? So if that's a break and continuation, the entry was validated down here. So you can see even on my write-up that's on the screen right there, I said trade validated down here, but price was overextended. Wait for an entry on the 1 minute or 5 minute time frame when price retraces to the SAR zone. Because here, if you were to take this trade, you would need your stop loss above that SAR zone you're trading. Because the key thing with this SAR strategy, when you make an entry, make sure that your stop loss is above the SARs you're trading. If it's not, wait for a retracement if you don't want to take the risk. So here, for me to have my stop loss above that, I would need like an 80 pip stop loss. I'm not willing to do that with gold, so I chose to stick with my 30 pip stop loss and then wait for a 1 minute entry down here. And look at what happened here. You see that retracement. So by the point gold came to this zone right here, I dropped down to the 1 minute. Again, I do not extend my SARs on the 1 minute time frame. So there's that. So at this point, I went ahead, and this was before market open. So you can see this candle is the 15-minute candle. It was 30 minutes before New York market open. So normally if a trade is lining up before New York market open, I want to wait until New York market open comes in, because I want to avoid getting faked out of trades. Because here, as much as this trade could have started off in profit if you chose to enter on impulse, let's see the next 15-minute candle. Do you see that spike to the upside? That's the manipulation you want to avoid during New York session. So at this point, this is the 9:15 candle, and then you go ahead. Perfect. So here I'll actually go back one candle because we're already on the 1 minute, and I'll show you what we're looking for. So here, what's the time here? 9:29 a.m., which is a minute before New York open. So at this point here in the trade ideas, it will be, yeah, so this particular one, right? So I said what I'm waiting for, best to wait after New York open, because if you took that trade on impulse, as we just saw, you would have gotten stopped out or faked out. So here, look at what's happening during New York open. So during New York open, here we need to see a break and continuation of a live sell SAR for us to take a sell. So here, let's see what happens during New York open. That's a 9:30 candle. Then you can see that manipulation going on still. Then price comes back down. Okay, there's our SAR, sell SAR, that's being formed right there. So we need 2 consecutive candles to close below this zone. Perfect. So candle 1 closed, candle 2 closed. So at this point, and this was on the live session, I said I'm selling gold with a 0.75% risk, 30 pips stop loss, 60 pips TP. And you can see the trade went straight into profit and then started melting down. At this point, we had already achieved a 1:1 risk to reward, I believe. Yes, 1:1 risk to reward. So I went ahead and asked folks to set break even on this trade. So break even, this was 60 pips TP, and gold from here started dropping down heavy, almost got taken out at break even, but the trade gold started melting down again. Now here the trade came so close to TP, but at this point it came like 2 pips or what is this, like 3 pips away from TP, and unfortunately gold reversed back up and stopped us out at break even. But it was again heavy news day post NFP. It was also a Friday, and for this trade I marked it up at break even. But at this point, for those on the live session, I was telling them, you know, go ahead and secure some profits given that it's Friday. And also personally, I'd taken a sell entry that was up here, and if you guys see, I don't know if I showed that, maybe I hadn't at that point. I had taken, personally, I'd taken 2 sell entries, so I'd actually entered the sell that was all the way up here. So personally, I was heavily up in profit because I had a trade that had already hit TP around this zone, around 1818. So I was, you know, telling the people on the live session, you can go ahead and secure profits given that it's Friday. But anyway, either way, I went ahead and recorded break even for yesterday. And that was it. So unfortunately for this week as well, for the official trades, I'm putting them in quotes because personally I have positive for the previous week that just ended, because again, remember, I take other trades on my own. So the trades that I send to the group or even take on the live session, they're just a fraction of what you can do if you learn the strategies by yourself. So that was the trade for Friday, and we'll see what the next week holds. So the next week, the market should be better starting next week, because we're in the last quarter of the year. Volatility is back in the market. A good amount of these manipulations that we are seeing and fake outs that we're seeing should start to subside a little, and hoping to end the year in profit. But ideally, looking at what we've done, every month since we started trading has been a positive month, so that's what matters. As much as you might have some losses here and there, the key thing is to make sure you're sticking to your rules, sticking to your strategies, and every month you're at least either at break even, or even if overall for the month you've taken some losses, you just make sure that you're learning from them and improve from them. But that's pretty much it for this weekly recap, and I will catch you guys with another weekly recap for this upcoming week. All right, see you guys. Peace.